Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. This is the SPX daily chart. I discussed how in the last video I would be looking for the market to start to roll over, and I wanted to wait until we reached this sliding parallel before entering any potential shorts. However, considering the overall strength of the market and the huge run up in NVDA after earnings, despite the expected slowdown or rollover in momentum, shorting the market as a whole right now does not seem to be the best option. We do have two expected troughs coming up, but they're going to be a little questionable now. I'm going to go over to the futures chart to discuss why. So, as I've mentioned in the prior videos, we have roughly a 2-week cycle, which is this orange cycle you see here. However, this measurement from trough to trough is 8 days, which is too short. It could be the trough is in and the cycles are shifting. That does sometimes happen at peaks and or troughs, but it brings in a little more uncertainty than would be preferred for trading whatever ticker or ETF you're looking at. In this case, I do still think, and you can see I have two different orange cycles here. This is beginning from the expected trough. This is from the possibility that this trough is in. This is actually the secondary. I do still think we'll get a trough here in the coming days prior to what should be a negative cycle as we come into the 2-month cycle trough. But I do have this here as a possibility for something to keep an eye on. That said, again, I'm not looking to short the SPX or the market as a whole right now because of how strong NVIDIA has been, and we'll take a look at that chart now. This is the NVIDIA daily chart, and as I had mentioned in the prior video, I was looking to achieve this target area right here. I didn't expect that we would sell off prior to earnings and gap up in such a big way and then actually run through it, but I thought we might move sideways and then ultimately gap to it and potentially sell off, or gap above it and sell off. We gapped up but then ran through it, and this is looking very strong. I do have, you'll see it's roughly, this is a longer than 2-month cycle here, but it has a mid-March trough. That said, I'm absolutely not calling the top, and as I did in the last video, said I would not be shorting it if we came here. You can't short this. If anything, I would expect this to continue higher, perhaps reach this upper warning line, and I discussed this in the last video. This is going to be a much quicker update, so I'm not going to get into the details of that now, but perhaps we run up to this upper warning line before we have a correction, which the size of that correction, you should not expect anything too large. And again, because NVIDIA is essentially controlling the market right now, you can't short the market as a whole. So what can you do? You can look at individual tickers. I discussed in the last couple of videos Apple. I've already traded it successfully to the downside. I mentioned that I had closed that position and I would be looking to reopen it potentially last week. There wasn't an opportunity to enter again until Friday, but we did get the signals for that. Let's take a look at that chart now. This is the Apple daily chart. I'll zoom out for a minute. I know there is a lot to look at on here, but we're working essentially with this blue cycle. It's roughly a 2-month cycle, and we're trading these orange cycles. They're roughly 2 weeks. My prior trade to the short side opened over here and closed down here towards the bottom with the expectation we might get a bounce because of this upward moving median line set discussed in a prior video that I will not discuss in this video. We also had a 2-week trough expected around here. It came a little late, but I'm perfectly fine with that close. I made 95% on that trade in just a few days. And I had mentioned in the last video, I was expecting a bounce and I would be looking for another shorting opportunity, and I'd be doing that in a few ways. And we have hit every check mark to short this again. That doesn't mean it will be a successful short, but I have every intention of opening a short position on Monday at the market open. with the expectation we'll achieve these targets discussed in prior videos. In this video, I'm only going to discuss the checklist I mentioned a moment ago as to why I think this is a good shorting opportunity. Number one, despite the fact that the market is so strong, it should be coming into a period of weakness. With NVIDIA holding it up, again, we have to look at individual tickers. Apple has been relatively weak, but it has consistent cycles, which makes it ideal for trading. There are weaker tickers out there, but they don't necessarily have as consistent cycles as Apple does or some of the other names that I prefer to trade options on. If we look at the median lines, we continue to respect this median line, and we just had a big bearish engulfing candle. Median lines, check. Candlesticks, check. One other consideration that I've mentioned in multiple other videos is taking out the prior day's low or high if you are looking to go long. But if we just look at a few of the past cycles, I'm going to hide the drawing tools for a moment. When did this trend end and begin to the downside? We have higher daily low, higher daily low, higher daily low, higher daily low, higher daily low. We take out the prior day's low here, and that would have been the perfect time to short. Lower daily high, 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 lower daily high. The bottom finally comes in here, and how did we know? We took out the prior daily candle's high. It goes up, higher daily low, higher daily low, higher daily low. You could have shorted here. I did not short here. I waited until this candle opened over here, but this would have been an appropriate time to short because you took out the prior day's low. Here you can see it's not always perfect. This would not be a good time to go long when you take out this prior day's high. And the reason for that is we're using the cycles in concert with this concept, not any one concept by itself. So when we put the cycles in alignment with the median lines, in alignment with taking out the prior daily low, and then finally, one other thing I really like for Apple is the 10 SMA. I've put it on here. It's yellow. I'm going to hide the drawing tools again. And you can see this acts as a pretty good trigger for when a trend either ends, over here the downtrend ends when we recapture the 10-day, and or continues to the downside, or ends, goes back to the upside, continues to the downside. It's a pretty good trigger, again, not by itself, but in concert with these other concepts I'm talking about. And what just happened? Well, we lost it here, right? And this is when I had talked about going short in my prior trade. And here we just retested it and we just rejected hard from it. So we have the 10 SMA telling us we can probably go short. We have the cycles telling us that we can probably go short. We took out the prior day's low telling us we can probably go short. We've respected this median line set, which we've already achieved the target on, but it's showing us that it might not be finished yet, which is telling us we can probably go short. We have enough evidence just in Apple alone to go short, and then considering that the market, while it's being held up by NVIDIA at the moment, should generally be experiencing some level of weakness, it might be a good time to go short in Apple. I wanted to open a position on Friday. We were around 183.50. I was looking at March 8th, 177.5 puts. They were very cheap. They were like 75 cents each at the time. I think they closed around 90 cents, but I'll be looking for something like that again, something a little bit out of the money, very cheap. I have the expectation of reaching at least 175, if not down to the 170 area. This orange line is a one-to-one of this move. This orange line is a one-to-one of this move. They both reach roughly to the end of this 2-week cycle. I would think we would reach this median line down here. This is a longer-term median line set that we have not yet reached. I discussed this in a prior video, but it uses a prior high, this low, and this high. And I think this would satisfy this median line along with this blue 2-month cycle. The risk to reward setup is potentially very good. If it opens roughly where it closed, you're looking at a 3 1/4 risk to target 1, 7 1/4, target 2. I'd probably take it off at somewhere around 172 to 170. It depends. I would also include the timing into that decision to close that, but potentially down to 170, which is $12. Obviously, it's a little different for options, but there's the potential to make 250 to 300% on options if you use a shorter term expiration, something around mid-March, and you buy them out of the money. And if this target is achieved, you're going to make multiple hundreds of percent on those options. That, of course, is not advice. That is just what I plan on doing. But it also depends on where the market opens. If it gaps down in a big way, it changes things, and maybe spreads are the better way to go. As always, thank you for watching this video, and be sure to subscribe for more.